Hey there, welcome to Fund to Money, your 24 into 7 buddy for all your money matters. You're watching Mutual Fund Q&A, our popular weekly video which we put up on YouTube, Facebook, and other social media networks. And today we'll be taking up questions like we do every time. And these questions are by two of our viewers. One is Anand Kumar, who wants to know whether one should buy Bharat 22 ETF for listing gains. That's number one. And number two is another one of our viewers, that's Rajat Arora, who wants to know what to do after the SIP gets over. He's planning a 5-year SIP. So that's what we are planning to do, planning to cover in this video. So please hang along. We'll be back very shortly. Welcome back. Welcome to Fund to Money, your 24 into 7 buddy for all your money matters. You're watching Mutual Fund Q&A, our popular video presentation, which we do every week. And this time we're going to take up questions, like every time, of two of our viewers. One is Anand Kumar, and the other is Rajat Arora. So let's take the question of Anand Kumar first. He has mentioned it in Hindi. So he wants to know about Bharat 22 ETF, which will close today. And he wants to know whether one should buy it for the listing gains. Now, here's our take. Now, when you're talking about listing gains, you're thinking like a trader. You know, you're quickly buying and selling shares for gains. You don't do it with mutual funds, number one. The reason why you don't want listing gains in mutual funds is because you're not that type of a person. If you want listing gains, you need to go to shares. And if you want listing gains, you're becoming a trader, and that's a very high risk investment activity. So this particular channel is not exactly catering to traders because they have the wherewithal. And here we're talking about people who are looking at a longer term investment. So when you don't want to bother too much about stocks, then you go into mutual funds. In picking up individual stocks, because the fund manager is doing it for you. Number two is you're going into ETF because you don't want to even worry about the fund managers. You know, in active funds, fund managers takes the investment calls, so you don't want to even do that. You just want to sit back, relax, and get the investments done according to the index, which Bharat 22 ETF does, as we have mentioned in our video, which a lot of people are going through and appreciating. It's about the index which it follows, and in that proportion the stocks are invested in. So what basically is going to happen is, if you want listing gains, you don't go to an ETF in any case, because ETF is a passive investment. You're unlikely to make those gains. So you're not going to make short-term gains. Even if you make those short-term gains, what is going to happen is you're going to end up paying 15% tax, because if you want to quickly make some kind of a gain, that's not going to happen, number one. Number two, even if you do that, you're going to pay 15% tax because it's a short-term capital gain. So anything which is less than 1 year, you pay those 15% short-term capital gain. So this is basically what Anand Kumar was asking. We hope you have answered his question. Now let's quickly get on to Rajat's question. Now Rajat wants to do a 5-year SIP, and he wants to know he can get the money out of 5 years, after 5 years, and what are the details. So we will try to explain to him very quickly. Rajat, yes, you can get the money out after 5 years, but remember, if it's an ELSS, then it is not. If you do the SIP for 5 years, remember each installment has got a lock-in of 3 years. So there you won't be able to touch your whole money together. Anything, let's assume this is 2017 and 2022. We are recording this in November. So if you're going to be trying to get the money out of an ELSS SIP in November, you cannot get all the money out with each of your SIP installment. So suppose 2022, that means 2019 November or 2019 December, the installments that you do, you will not be able to get it out, that money out, because 3 years would not have got completed. So remember that. Number two important point for you to remember is the taxation. So in 2022, if you stop your SIP, the last 1 year, the investments, they would be subject to short-term capital gains, which you just mentioned was 15%. Apart from that, others would be more than 1 year in tenure, in terms of period of investment. So no tax out there. So that's number one. What do? you tell your bank to stop it, stop the funds transfer that's going on. You tell your intimate your fund house. You also intimate your advisor. The advisor actually kicks off the redemption procedure, because that service the advisor is providing. If it's bought through bank, you can kick it through it. If you have bought it directly, you can go to the site and kick off the procedure. We're not talking in detail about it, because there are people who can handhold you through, depending on where you bought. And if it's the company fund house directly, you can go to the site. The hand holding will happen. Also, that procedure will be told to you, or you can get on the phone or mail. There are lots and lots of ways by which you can get your money back. Don't worry about the money, it'll be fine. So there'll be no problem. So this is basically what you need to keep in mind when you're trying to close an SIP. There are other things, of course, but it's better. Why bother so much about it when there are people who are out there to help you? People whom you have bought it through, they should be helping you out. So hopefully you found this video useful. If there are other questions, you can plug them in the comment section. If you like the video, give a like, click on the like button. Apart from that, you can share this video as well. And of course, if you're coming up for the first time, subscribe to our channel. Apart from that, we are there on all leading social media networks. And of course, we are there on our website, www.fundomoney.com. So till the next week, take very good care of yourself, and goodbye.